Good afternoon, everyone. My name is Jeffrey Baskin. I am a currency analyst for Synergy FX. I also run the webinars. Today is February 20th, 2012 in Sydney, Australia, and we are going to be running the week ahead and talking about what's going on in Forex this week. Before we get started, as usual, we have our risk disclaimer. The purpose of this webinar is for educational purposes only and should not be construed as trading advice or capital. Please only invest risk capital that you can afford to lose. If you should have any questions, please consult an independent tax advisor or financial professional. For those of you that are new to these sessions, thank you very much for joining us. The way that we run the sessions is pretty simple. I have certain currency pairs that I'm going to talk about, and if you have any questions, feel free to send them out through the chat box or the question box. And if there are any currency pairs that aren't covered in the discussions that I have started, or the currency pairs that I talk about, and you want to talk about setups on other currency pairs, also by all means send those out through the question box or the chat box. Normally we start with the euro, but today we're going to start with the Aussie. We had a very massive gap to start out the day. There's actually an article in Bloomberg pretty much talking about what happened to start. So if anybody wants to take a look at it, you can just, actually this is on Reuters, I'm sorry. You can take a look at it. Kind of gives you a rundown on everything. You had China cut their reserve ratio by 50 basis points. We had the Eurozone ministers, expecting to approve the Greek bailout, and Kiwis hit 5.5 month high after a fund announcement, which also caused the Aussie to jump and to gap open. So if you take a look here, we closed Friday at roughly 106.97, and we opened today at about 107.60. 107.67, 107.68, somewhere in that neighborhood. So we're looking at about a 70 pip gap that opened the week on the Australian dollar. Now, normally the rule of thumb is when you have a gap, at some point in time the gap is going to get filled, especially a gap this large. The question becomes, when is the gap going to get filled? We gapped open, at, as I said, 107.68. We ran all the way up to about 108.15, and now we're back to 107.77. So, my feeling is that unless we have some sort of other news or something else that's going to push this higher. If you look here, we have two gaps in this same exact spot. This gap right here, I mean, I know it doesn't look like a gap, but you had a straight up move, and it's in the same spot, same position. And I do think if this thing if it backslides as we coast into Europe opening for the week, and we do get some movement into this gap, that we may fill the gap before it heads higher. You have a lot of chop and move through these areas, and depending on what happens when Europe opens, if it points towards weakness on this side of the world, then I think that we will fill the gap. Usually when there are gaps this large within the first couple of days of the week, they do get filled. So I would definitely keep your eyes open, and with the price action that we've been seeing, all this chop and move from 106.30 to 107.75, it wouldn't be that far-fetched for this thing to come back down to 106.75 before it resumes its upward climb. So I would see if we do start to fill that you may take look at some short positions, and not necessarily long-term short positions, but taking advantage of possibly taking 40 pips out of this to watch it fill the gap, and then seeing where you go from there. I think in a couple hours, in the next couple hours, you're going to see where this is going to go, and it may just gently kind of slide in to fill this 50-60 pip gap before Europe really gets open and rocking and rolling in their trading session, and then you could see that upward trend resume. Let's, while we're talking about this side of the world, let's jump into the New Zealand dollar and take a look at that as well. You see the same type of scenario. We see a large gap to open the week. We closed 83.15 roughly on Friday, and we opened today at 83.95, and we hit a high on the day of about 84.25. So once again, it wouldn't be impossible to see this gap get filled before we move back up to start making new highs. So I definitely keep your eyes open on that. And even if you're bullish on the Australian and the New Zealand, which I am right now, I still would like to see these gaps filled before we start pushing higher. I don't want to see this kind of hang here for a while, just kind of wide open on the chart as the week goes on. So I would really like to see these gaps get filled before we start reinitiating long positions. And once again, this is one of the things that for those of you that were with us at the end of last week, this is one of the things that I said to make sure that you do is close out your positions by Friday, because you can, if anything happened, you could see some large gaps over the weekend, and obviously, we're seeing, 60 to 70 pip gaps on the Aussie and the New Zealand. Any questions about the Aussie or the New Zealand? Please go ahead and send it in through the question box or the chat box. Alright, let's move on to the Euro. Euro, we had a much smaller gap. It's looking more and more like the Greek deal is going to go through and it's going to get ratified. But there's still a lot of sentiment out there that Greece is eventually still going to leave the Euro anyway. So once again, there's just a whole lot of indecision, a whole lot of headline trading. I think once the deal gets signed, we're going to see some more Europhoria and a little bit of Euro strength to maybe 134, 135, and then you're really going to start to see some of the impact of what this deal is going to mean and the future direction of of the Euro. So for now, we're at 132.15. Resistance is at 133.25. So we're going to see, where this goes and see, kind of what the sentiment is, going into this week. We have some other resistance at 132.33.40 area. So if it breaks above that, we could be looking at longer moves. Let's just take a quick look at the Fibonacci. You see that we ran right here to the 50% and got a bounce. So we're pretty much sitting right at resistance. And I want to see where we go. If we break this, I think we should definitely get to 33 and a quarter. And once we get to 33 and a quarter, I want to see where we go from there. Here's our daily chart, and we're sitting right here on the moving average as well at 32.36. So any breaks above that, you should be seeing longs, and I would actually probably use this as a general target if the Greek deal goes through and people are Euro bulls. I would use this 200 period moving average as a target before you really get an assessment of what's going to happen and where things are going to go. So once again, we're at resistance. We're sitting at the 100 period moving average, and we're sitting at a crossroads as far as on the fundamental side. Who's going to be a part of the deal? Is Greece going to stay in the euro? Are they going to go out and do their own thing? And what kind of impact the austerity measures are going to have. Does anybody have any questions about the euro dollar? Alright, let's keep it moving. Now we have the Euro Swiss that we normally been taking a look at simply because of the involvement of the Swiss National Bank, and it's also involved in the euro. And I can find the chart. We'll take a quick peek at that. We're back to 120.91. We flirted with 121, and once again, if we get euro strength, I still think we'll test 121.25 this week if the euro remains strong, and then we'll see if we get a breakout. But for right now, I'm treating this pair like I treated the dollar yen a month ago, and for the months before that. It's just not even a pair that, if it's not close to the 120 peg, that I'm not looking to trade it until it starts to become a little bit more active and a little bit more volatile. 20, 25 pip trading ranges on a day-to-day basis are not worth trying to pick out a winner, so to speak. So I'm just leaving it alone. Euro yen. Euro yen is also sitting on a moving average. We had a gap open, same as euro dollar. We're at the 200 period moving average at 105.54. It hit that and pulled off. And I want to see if we break this 105.65 200 period moving average. We haven't been above the 200 period moving average on the euro yen since July of last year, and we're approaching that right now. And if we do get a break through this 200 period moving average, I would say that we have a target of 107.15, which would be a longer term 38.2% retracement based on this this daily chart that we're looking at here. Right now I'm pretty much looking at longer term moves, because I do think that that we're going to see some larger moves this week. I think there's a lot of fundamentals in play and some major technical areas that we're involved with. So I definitely think that we're going to see some moves this week. So keep your eyes open when euro opens. If we're euro positive, yen is at 6-month lows. So this would be my play if I'm looking to go long euro right now. I'm looking to go long euro yen. Any questions on the euro? Any other euro pairs that you want to take a look at? Okay. Let us, since we started talking about the yen a little bit, let's talk about the yen. Let's talk about the dollar yen first. We just talked about the euro yen, and then we can talk about the dollar yen and the pound yen. We hit pretty much the levels that we hit on all of the previous Bank of Japan interventions. You'll see that today when we opened, we were down, but we closed close to 80 last week, and if you look here, other than a little bit of wick, this is all above intervention levels, and the yen is at the weakest that it's been against the dollar since July also of last year. So 80 is, this seems to be our mark. 80 is going to be our mark to see whether or not this dollar strength / yen weakness is going to hold. And that's kind of what we're waiting for, because you have old support here, at this 80 level, and we're starting to see this actually move. We're starting to finally see this pair start to trade like it has in the past, where you actually get some movement on a day-to-day basis and some range. We sat through months of 20, 30, 40 pip ranges, and finally we're starting to see some movement. So we'll see if that continues. I do think if we see a break above 80, that we could see this continue. On a technical basis, we've broken through 100 and a 200 period moving average, and now we're sitting right on resistance / old support, and I want to see what happens. So unless something comes out of Japan that's going to indicate a renewed strength, the government wants to weaken the yen anyway, so I definitely don't think that they're going to try to make any efforts to try to slow this down. So you may get a little bit of a pullback before it continues, but a break up into the 80 mark, I definitely like renewed long positions on the dollar yen. Alrighty, let's see, pound dollar, pound Aussie. Where's the pound yen? Here's our pound yen. Same thing, pound yen. This is a daily chart. We broke the 200 period moving average, not even breaking a sweat. It hesitated a little bit, and then when we did get a break, it just ran. We had a huge move from 122 to 126 over a couple of days. We're sitting at 126. We haven't been this high since October. And once again, we're kind of at a little bit of a resistance area, and at the same time, I think if we do get euro strength, that's going to spill into the pound strength as well, and we will see, we will see this continue to rise. And this is a little reminiscent of how the pound yen used to be. You used to get days on the pound yen where you'd get 150 pip moves without even breaking a sweat, and we saw a little bit of that last week, where we had some big days and some big trading ranges. So if it starts to resume some of that volatility, it could be an interesting pair to trade. But sitting here 127, just like 80, on the dollar yen, 127 would be my mark. We break up through that, we could see definitely some more resumed long positions, and you have this range right here, going back from 2010 into 2011, from 126 to to 134. So if we get back in the middle of that range, you could see some major moves to the upside. We can talk pound dollar. Pound dollar, we've seen strength as of late, and we did see a little bit of a pullback. We saw a pullback pretty much from the recent uptrend. And from the recent uptrend, we kind of topped out at 159.15, and then 156.60 was the 38.2% retracement. We pulled back there, and then we saw it bounce right off of that. We just cleared this 200 period moving average again on Friday. We started up today, so if we get above 160, we're going to see levels that we dating back to once again, if we get into 160, dating back to October, and then this area of resistance at 161. And once again, I think that we're waiting to see what happens in Europe. If Europe is strong and the euro is strong, the pound should follow. And we will see things reminiscent of a few years ago, where we're just getting euro and pound strength, and the pound could resume a move back up into the mid 160s. But I think we're going to find out a lot of where this is going to go in the next couple of days. All right, we're going to take a look at the dollar Swiss and the dollar Canadian. Before we do that, any questions? Okay, here's dollar Canadian. We had been seeing some dollar strength, but as of the end of last week, that started to reverse. We topped out at about 93 again, and then we pulled back. We kind of broke back down through the 100 and 200 period moving average. We're at 91.50 now, and with some of the uncertainty out of Europe, until that gets settled, you may see some Swiss strength, and in which case this pair will continue to go down. If euro gets solidified, then you probably will see this consolidate and go sideways a little bit, and eventually you may see an upward trend. A little bit of the haven status will be removed from the Swiss franc, and money may flow elsewhere. So I'm sitting tight right now. It's been really, really choppy through here. Can't really, not getting much of a pattern, and it's just been really choppy. So for now, you had a bit, I guess, of a head and shoulders here. You had a shoulder that come up and form a head and a shoulder, and then you can draw in your neckline. Pretty much right here, where you're at 91.62. So if it looks like it's short, you have a little bit of a technical to back you up on that. But once again, I would definitely kind of sit tight for the next couple hours, let Europe come in and kind of dictate the pace, and see where this is going to go. We had a dollar CAD gap to the downside. As we talked about before, we had commodity currencies gap. This was also pretty sizable, 99.57 down to 99.28. So we had about 30 pips on this. Same deal. I am On dollar CAD, I'm very bullish on the Canadian right now, but once again, I'd really like to see this gap get filled before we resume a downward move. I still think that we have a fair amount of downward leg on this pair. We see that we did break support, but once again, we got that gap kind of hanging there. So, for the purposes of resuming shorts or taking shorts, I'd love to see the gap get filled before it continues to proceed to the downside. I really liked short at 99.50. We're at 99 and a quarter right now, but once again we have the gap from 99.57 to 99 and a quarter. So see what happens, and we will go from there. I really want to see what happens when Europe comes in and how they're going to dictate what's going to happen this week. So keep your eyes open. We're going to be sending updates out on Twitter. You can follow us on Twitter, SynergyFX, twitter.com/SynergyFX. We're also going to be posting the week ahead on our blog, which is synergyfx.wordpress.com. And then you can also find me by email, jeff@synergyfx.com.au. And before we wrap up for the day, does anybody have any questions? Any other currency pairs you want to talk about, or any other ideas that you want to discuss? If not, we are going to wrap it up. All right, nothing really coming in, so I definitely appreciate everybody coming out today. Thank you very much for your attendance. If you need to reach me, send me an email, Jeff, Jeff, at synergyfx.com.au. I'm happy to answer any questions you may have about anything Forex related. And if you want to talk about the markets or you have a trading idea, just drop me an email and we can communicate that way. Enjoy your day. Good luck with your trading, and we will see everybody later in the week for the week in review.